Okay, I was explaining, no, wife and husband case. So 10 lakh rupees husband is earning, but he, officially also the son has to show his income under husband's income only, that is father's income only. But even then, father will not pay any tax. That is tax avoidance. He will show it very. He will show it as if his income is not 10 lakhs but only 4 lakhs or 2 lakhs. He will show. Okay, so but there are various ways.
Which means did he gift to his wife and son, sir?
Private employee, where is the record?
Sir?
He is a private employee. Where is the record that he is earning 10 lakh rupees? That
Yes,
is the
sir.
problem.
If he earns the 10 lakh rupees for avoidance or evasion, he can give to his wife or his son to avoid the tax, no, sir.
Yes, Subramanyam, but he will not tell to the government that he is earning 10 lakh rupees. He will say that he is earning only 2 lakh rupees. Where is the evidence? I told no,
Yes,
samosa
sir.
sale will earn 10 lakh rupees, but he will not
Yes,
show it.
sir.
Okay, so that is one kind of tax evasion. You see, it is totally illegal. It is totally unethical. It is intention to defeat legal spirit. They are going to do like that. So they will give false statements. It will lead to sometimes, if it is caught officially, if anybody complains, or several times we will see in the newspapers of politicians or film stars' houses are going to be raided. So that leads to litigation in courts. Tax evasion leads to litigation in courts. It attracts penalty. It is evil to nation or society. It encourages bribery and weakens economic and political situation in the country. Tax evasion involves avoidance of payment of tax after the liability of tax has arisen. Okay. So this is what you mean by saying tax evasion. Okay, it is totally unethical, illegal, and it may lead to the person being arrested. Okay, so totally illogical, illegal, unethical is tax evasion. So tax avoidance is legal, but you find out loopholes of the law. Wherever loopholes are there, you try to catch them, you try to reduce your tax. So sometimes in this also, you may have to face court litigations, you may have to pay penalty. It is also evil to nation or society. See, in a previous class, not today's class, in yesterday's class, I told you, political parties, to political party, if you donate 100% tax deduction, you can show. Okay, that is a tax. In order to avoid tax, you are going to donate. At the same time, you are going to quid pro quo on quid pro quo basis. You are going to donate. Means you expect something from the political party. So it may lead to bribery. It may weaken the economic and political system. Okay. So all these things are associated with tax avoidance. So planning for avoidance before tax liability arises here. See, here you evade tax, you try to evade tax after the tax burden has arisen for you. But here, before the tax burden arises for you, tax liability arises, you are going to avoid with the help of various deductions, with the help of various kinds of provisions that are associated in income tax laws. Okay, but opposite to these two, we have tax planning, which is legal, which is ethical. Here there is no intention to defeat legal spirit, and you are going to take a legitimate benefit of income tax law. You will not face any litigation in court. You will not have to pay any penalty or prosecution. It is good for the nation. It is good for the development of the society. It creates various employment opportunities, and in always tax planning is going to be of some kind of help to the society. It promotes professionalism and strengthens economic and political situation, and it is also this tax planning also, it is going to be before tax liability has arisen for a individual, for an individual or for a person. This is what you mean by saying. So in the third unit, concept of tax planning is there, tax avoidance, tax evasion. These concepts I explained you. I showed you the difference between these three also. Now tax management. What is tax management? Now come to see this tax planning. When it is explained in a broader term, much wider term, it requires management of affairs in such a way that results in the reduction in minimization of tax liability. That is reduction in minimization of tax liability. See, when you try to reduce your tax burden, what you are going to do is you are going to prepare accountancy books properly in accordance with tax provisions. And here I will ask you one question. Come to depreciation. In how many ways you can calculate a depreciation? There are several ways. What are the various methods of calculation of depreciation? Yes.
Written down value, straight line method.
Okay, straight line method, written down value method, sum of digits method. Different methods are there, but according to income tax law, which method you have to follow?
Written down value.
Written down value method only you have to follow. Very good. Not straight line method. Okay. So you should have that understanding. That is, in maintenance of accounts, you should maintain them properly. You should show when the authorities ask, and you have to get your accounts audited by chartered accountants, by certified chartered accountants. So these are all part and parcel of tax management. Okay. Tax planning, without tax management, tax planning is not possible. Okay. So tax management involves various kinds of things that are associated with reducing the burden of tax payment. So these are the some of the examples of tax management. Deduction of tax at source. Just in the previous class I mentioned, government employees, if their income is liable to be paid tax, the DDO, that is drawing and disbursing officer, will cut the tax at the source only. Tax deduction at source only it will take place. That is TDS. Tax deduction at source only will take place under section 194 to 196. This is also part and parcel of tax management. See, if suppose let us take for example, our principal sir has collected tax from my salary at source only, but he did not deposit the amount in government account. To tax authorities he did not deposit. Is there any punishment for him? Yes. Is there any punishment for him? Is he liable to be punished?
No, sir.
No, he has to be punished. He has to pay a fine. If he makes any delay, that is his responsibility. Quarterly he has to file his return. If every DTO has to file a return, online return he has to submit. If he fails to submit, if he delays, then he has to pay fine. Please remember, he is liable to pay fine. Penalties will be there on DDOs. That is part and parcel of tax management. Okay. So the DDO should know the principles of tax under tax deduction at source that are applicable for DDO under section 194 to 196. Please remember. Similarly, payment of tax and self-assessment under section 140A is also available. See, suppose I am working in a private organization, or just now in the previous examples also I mentioned, I am selling samosa. No DDO is there for me. No drawing and disbursing officer is there for me. So I have to pay tax on my own. I will show the my tax payment burden based on self-assessment. I will show my tax report to the government under self-assessment method under section 140A. So payment, suppose if a person is unable to pay tax, requisite tax, and he has to pay tax on demand under section 220. So maintenance of accounts under section 44AA, the maintenance of audit of accounts under section 44AB, payment of cess, duty or fees, bonus and commission to employees, etc. under section 43B, furnishing return of income under section 139, to documentation and maintenance of tax files, etc. A person has to maintain. See, in the previous examples I mentioned, suppose a company has donated to political party. That proof should be there. Documentary evidence should be maintained by the authorities. The company official who is responsible to maintain that documents related to donation to political party, he should maintain it. So review of order received from tax authorities. Suppose if any tax notice is received from income tax authorities, they have to review that order. If at all any request, if it is sent online to tax authorities, they may get justice done for them. So all these are part and parcel of tax management. Okay. So TDS and similarly TCS, tax collected at source, tax deduction at source, payment of tax on demand, maintenance of accounts, audit of accounts, payments of various cess duty, furnishing of return of income, documentation, review of order received from tax authorities. All these are part and parcel of tax management system. So in order to face law, in order to reduce tax burden, in order to see to it that nothing untoward happens with reference to tax provisions, like the person who is responsible to maintain, who is responsible in maintaining records with relation to income tax department, the person has to maintain them properly. Those records should be maintained them. Those records should be maintained by the person responsible to show those records to the tax authorities. So this all comes under the purview of tax management. Come to the difference between tax planning and tax management. See, the objective of tax planning is to reduce tax liability to minimum according to legal ways. But here, the main objective is to comply with the provisions of the law. You are going to maintain account books. You are going to get the books audited as and when required according to law. You are going to maintain receipts of donations or other kinds of, if you are claiming any deductions from your incomes, you have to maintain that record. That is part and parcel of tax management. It is futuristic in its approach. Means plan itself is futuristic. Please remember, that is why I asked the question, what is tax, what is plan? You will not plan what has already happened. You cannot plan it. It is gone. You are going to plan anything that happens in the future. So its main approach is futuristic. Planning is futuristic, whereas tax management is related to past. Past, whatever happened, you are going to maintain that record properly. Okay. It is wide. Tax planning is wide in its coverage and includes tax management. Tax management is also part and parcel of tax planning, whereas tax management is limited in scope. Okay. The benefits of tax planning will be seen by the organization in the long run. Okay. For several years, you may have to maintain the records as and when the authorities ask, you may have to show those records to them. So everything in a long run, if you plan, that will be beneficial for the company. Whereas with the help of tax management, you can reduce penalties or penal interests or prosecution, etc. can be avoided with the help of tax management. This is the difference between tax planning and tax management. The provisions related to various tax management skills and the differences between tax planning, tax avoidance, and tax evasion. And this is what you mean by saying tax evasion, tax avoidance, and tax planning. Now I am opening the syllabus. I will show you the syllabus. See, concept of tax planning, I explained, tax avoidance, tax evasion, tax management, meaning and scope of tax management, I explained. Implications of tax planning. So what are the implications of tax planning? See, this is, in a way, it is scope of tax planning. You can say that with the help of tax planning, you can reduce tax liability. You can minimize the litigations. Litigations means you need not face court cases because you have a proper planning in place. You will be able to go in for a productive investments, and it will ultimately lead to healthy growth of economy of the country. Similarly, it will lead to economic stability of your organization. If you plan properly, you need not face any crunch situations because you are going to maintain records properly. You are going to update the records in time, because whenever tax authorities ask you, you should be ready to present those records. So this is what you mean by saying the scope or the implications of tax planning. Scope or implications of tax planning, same side heading, same matter you can write. Okay. Similarly, next one is requisites of a successful tax planning. In previous classes, I mentioned it. What are the requisites of tax planning? You refer that video. And methods of tax planning, you can see this tax planning can be sometimes short range tax planning, or it may be permissive tax planning, or it may be purposive tax planning, and sometimes it may be long range also. So tax planning methods for short range method, long range method. See, in a tax planning, normally short range means only within 1 year you are going to see to it that within you are going to plan for 1 year's benefit only. Only in that particular assessment year, or with reference to particular previous year only, if you are planning such that your tax is reduced only in that particular assessment year, that is short range planning. But if you go for long range tax planning, means it may be more than 1 year, more than 3 years, 4 years, or 5 years. With long range tax planning purpose, with long range intention to reduce your taxes in the future also, you are going to plan accordingly your financial resources, your records, everything you are going to maintain according to a vision. See, previously when Sri Nara Chandrababu Naidu was the chief minister of the state, he used to have he used to mention a vision 2020. Before 2010 only he mentioned vision 2020. Am I correct? That is long
Sir,
range.
it is in the year 2001, sir.
Okay. So he has a long range vision, that is. So similarly in tax planning also, long range tax planning means for several years you are going to plan in advance. Accordingly, you are going to plan your resources. Okay. Then now coming to apart from long range and short range tax planning, you have permissive tax planning. Permissive tax planning means, see, you all know about section 10. At your degree level, at your UG level, you have studied. So various kinds of deductions that are available to assess this. Let us take, for example, in physical class also I mentioned, you will earn scholarships, but you need not show that scholarship amount in any tax returns. You will not include that amount in your parental incomes. So those are exempted. Agricultural income, let us take for example. Those incomes are exempted. So you are going to plan your financial resources according to the permissions that are granted according to various provisions of income tax. If you plan like that, that is permissive tax planning. You are not trying to evade tax. You are not going to you are not trying to avoid tax. according to the permissions that are given, according to the provisions that are given in the income tax laws. You are going to take the benefit of those provisions, and you are going to try to reduce your tax burden. Okay, that is permissive tax plan. Then purposive tax planning means here the main intention is, the purpose itself is to reduce tax burden. That's all. The secondary intention is not tax reduction of tax burden, but main purpose itself in carrying out a certain thing is reducing tax burden. In the previous class, Subramaniam asked whether or in this class only maybe, if husband gifts amount to wife and son, he can escape tax, no sir. So that is purposive tax plan. His main purpose is reducing tax. That's all. So these are the various methods of tax planning, various kinds or various types of tax planning. Okay, did you understand? So I explained you these concepts: concept of tax planning, tax avoidance and evasion, tax management. What is tax management? Meaning and scope of tax management, implications of tax planning, requisites of a successful tax planning, and methods of tax planning. Just a minute. So you can see it in the previous class also. I mentioned requisites of a successful tax planning. So these are the requisites of a successful tax planning mechanism. So the person who is going to plan that reduction in taxes, he should have a thorough knowledge of various laws. That is Income Tax Act 1961, Income Tax Rules 1962, Annual Finance Act, circulations and clarifications issued by Central Board of Direct Taxes, preparedness for retrospective amendments, knowledge of other allied laws like GST, Transfer of Property Act, FEMA, or knowledge of methods of tax planning like determination of residential status, selection of suitable form of business, capital structure decisions, diversifications of business activity, and own or lease, optimum claim of expenses to reduce the tax liability, proper documentation. All these things already I discussed in the previous classes. That video is also uploaded in the YouTube. You go through that after the class is over for wider reference. Okay. So that part is over. Coming to capital structure decisions. Okay. So dividend policy also I explained to you. Capital structure decision. Under capital structure decision, I asked you to note down this problem. Have you noted down? This newcomers came, no? The Kishore, Priyadarshini, Nagajyoti. Please note down at least in tomorrow's class. I will explain this problem.
Okay, sir.
Okay, you note down this problem. Okay.
Okay.
So I am ending,
Sir.
Subramaniam. Yes.
Sir, have you visited yesterday's tax labs?
Yes.
Thank you,
Okay.
sir.
Thank you. Students, I am ending here. In the tomorrow's class, I will meet you.
Okay, sir.
Thank you, sir.
Okay. Thank you.